Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, February 16th. Let me just adjust the volume here. Okay, that was bad. We are back with XTM Inc., XTMIF, over-the-counter, paid on the CSE. Marilyn Schaefer, the CEO. Marilyn, welcome back.
Thanks, Jack. It's good to be back.
So XTM, of course, as we all know, is the company that's revolutionizing the fintech, the U.S. The restaurant, the hospitality market, which is really it's $1 trillion opportunity, and of course, our goal at Wall Street Reporter's next Super Stock live stream is to bring you those stocks which have that 10x to 100x upside potential. So these are companies going after massive multi-billion-dollar market opportunities are at a key inflection point and with multiple catalysts in place which can ignite that massive increase in shareholder value. And we've had already in the last 18 months, 9 stocks that have increased between 10x and 50x. And we're going to find out if XTM is going to be that next 10 bagger. So Marilyn, with that said, you had some really interesting news today, which I think gives us a sense of what the possibilities are for XTM.
Yeah, it's really important news for us. We've been, looking forward to a full, robust launch in the U.S., and that's happening now. So, through a partnership arrangement, we are now launching. We're about to launch 100,000 mobile wallets, virtual debit cards, and also a portal, a place for the first bit of HR information that a person is looking for, W-2s, to be able to access that. So this is our way of really building around the whole EWA, earned wage access space that is more important than ever in the US for the service industry.
Okay, so the main takeaway I think what investors need to know is essentially XTM is now really expanding into the U.S. market. I mean, up till now you've been mostly in Canada, right? Doing the
Yep.
Today program, and we're going to really I'll ask you just to give a quick snapshot of what XTM does for anybody that's new. But the big news is essentially you're expanding into the U.S. And I think you're going to start off with it's about 100,000 clients. This is to start with, right? With this partner.
Yeah, end users. Yes, we call them members. Yeah.
Okay. So 100,000 end users. What does it mean? What is this going to mean in terms of revenues? Because I think that's what investors want. That's the main thing they care about. Like, what is this going to mean, and how can they extrapolate this? Because 100,000 is only a small. This is like a very small piece of the market that you're addressing. I mean, you're addressing a mass. It's like it's like $1 trillion market in total. Restaurants, hospitality in the U.S. So the 100,000. What can this generate for XTM?
Well, let me start with the fact that you're right, Jack, there's 35 million people in the services industry. That really is our addressable market. But what this means to us is there's so many ways to slice and dice this revenue. Once you have this base, the monetization opportunities are endless. Not endless, but they're vast. And that's what, the other businesses out there that are in a similar space, but with a different approach, they've already realized this. So the Chimes of the world and the Daves of the world, Dave Banks and the neobanks out there, they're out doing a fantastic job acquiring members. It's an expensive proposition. We're out there and we're acquiring hundreds of thousands of users at a time. And the way to monetize that is to add features and value. So as you know, one of the big things for us is GDV, the gross dollar value that we run through our platform. And there's 2 tricks there. There's 2 really significant things there. Number 1, we need that volume up. And number 2, because we're free to the business, we need to ensure that as much of that money that's running through our platform is spent at a point of sale as possible, or either through online or in-store shopping. And we're really happy to see that in Canada, that number is growing as people trust our platform. They trust us as a business. They begin to realize that everything is flowing beautifully, that we're fully compliant. We're in Canada, we're a money services business. And as that starts to happen, they start to get more confident and they don't feel they need to move the money off of their wallet immediately. And in the US, this is our big push as well. Use this as your mobile bank account. Use it as your secondary account. And maybe for some of you who are unbanked, use it as your primary bank account. You can do everything from here that you could do with a traditional bank.
Okay, so okay, now this is really interesting. Do you see really is XTM really a what do you call it, a neobank essentially at this point?
Essentially, we are.
It's a neobank platform. Okay.
Yeah.
And I think you have. Okay, so you have, I think, a U.S. Bank. You have, like, I think you had some. Was it bank charter that you got recently or something? Or?
Right. We can't take deposits, and so our issuing bank is the Bancorp.
Okay.
One of the largest issuers in the United States. And, they are incredibly innovative. They're unbelievably fantastic to work with. They're thorough, and it's taken us a while to get to where we are today, but we're happy to say we are good to go. And so that's what we're doing. So again, the challenge we have right now is not at all technical. It's sales and marketing, and it's adoption. We're putting as much money as we have into sales, into marketing, into moving as many businesses as we can into our time-saving, cost-effective, efficient platform, and then really helping them to see this as a bank account that they can trust.
Okay, so essentially, I'm curious. You mentioned, like, part of the market is like people who are unbanked, or which is a large percentage of the U.S. population, especially people in the restaurant hospitality industry, right? I mean, the whole business really, like, for example, you have let's say in a restaurant you have waiters, busboys, cooks. I mean, like, a massive amount of people, right? Some of these people don't have traditional bank accounts, right? So with essentially you're essentially helping out this market with your system. Now, you said earlier, I think before we got on the live stream, I think you're doing right now gross dollar value, the GDV, right? The transactions going through your systems. How much per month?
So, Canada was our MVP. And we're super happy to say that we have the lion's share of the market in Canada. That's the good news. The other news is that there's been a lot of restrictions because of the pandemic, but we saw a viewpoint. We had a purview of what we could actually do in full reopenings. And for 2 weeks in December, everything was wide open, and we did 25 million in GDV for those 2 weeks. So
2 weeks, for 2 weeks.
In 2 weeks, 25 million. Yeah.
Okay, and this is just in Canada. So that means roughly, $50 million run rate based on.
Yeah, and those were the 2 weeks.
I'm sorry, no, excuse me. I'm looking back. $50 million a month is basically what we're at. So it's $600 million a year. $600 million a year run rate is the number.
Yeah, and that was just for the 2 weeks before the holidays. So of course we were disappointed, but we see a lot of hope now with, Canada's lifted a lot of the restrictions. Travel is opening up, restaurants are opening up. So we see a lot of light at the end of the tunnel for this vast foundation that we've spent a couple of years building, and now we're going to reap the rewards of all that seeding.
Okay, so I think probably one of the things that's held back the stock, and like a lot of stocks that whether it's in the restaurant, hospitality, anything to do where COVID affected that industry. Essentially, right now we're kind of seeing the big reopening kind of really gain steam. I know in Canada, I think I know there's like a protest going on with the bridge and the truckers and all this. So I think that people are really gonna, in the next probably few weeks or a month, you're gonna have the doors completely blow wide open, because like in the U.S., like even like the most restrictive states have kind of lifted a lot of the mask mandate. All that stuff is kind of going away. So really, this I think would be a massive tailwind for XTM. Okay, so back
I
to this.
agree. I agree. And I was just going to say, Jack, that honestly, I don't think without the shutdowns, I don't think we would have seen the adoption that we saw. It was quiet, there was no noise, and we were able to go to, every restaurant in Canada, essentially, especially the restaurant groups. We haven't focused as much on the smaller ones, but the restaurant groups, and we've been able to show them how they're going to save time and money. We had one of our very smart groups, restaurant groups, do their own case study to really analyze what kind of time and money they would be saving. I'm just going to reference my notes for a second, but so after they invest, for example, the time in getting the program up and going, and they even quantified that to a certain extent, they're looking at hundreds of thousands of dollars across their network, their syndicate, in savings. Well, savings, it's an ROI because it's a zero investment. They don't pay for the setup. We do all of that complimentary. And on top of that, they're saving hundreds of thousands of dollars, not to mention in the US, where earned wage access and getting paid the same day is going to incentivize and create better time and attendance for that industry, that service industry that's finding it so difficult to get people to come back to work. So there's a real advantage.
Yeah. Okay. I think before we get too deep, just for anybody that's new, just give us a quick snapshot of what XTM does, because I should have started off with that, but here we are now. So the problem that you're solving, and just explain what's the big problem you're solving for your customers with the market opportunity.
So two problems. Number one is replacing cash in an ecosystem that still relied on cash to pay out gratuities. So especially very much so in Canada, maybe a little bit less so in certain states throughout America. But in Canada, even though everyone was paying with a digital form of payment in a restaurant, they were still removing cash from a bank and stuffing envelopes and paying out their staff. We cleaned all of that up and digitized it. And our product consists of an app, a prepaid card in a MasterCard that syncs with the app, and a mobile wallet that gives you, all of your transaction records, enables you to move money, and enables you to pay bills, all of these things that you would do from a traditional bank account. In the US, the problem we solve is paying, and we're also going to solve this in Canada as well, but especially in the US, is paying out people their wages and their gratuities the same day.
Okay, so this is, again, we've talked about this before. It's a huge deal, especially in this industry. The restaurant, the hospitality, clubs, etc. industry. People want to get paid the same day, and this gives the employer a major advantage in terms of recruiting employees, which is a massive problem right now, and also retaining the employees, which is a massive problem. If somebody knows that if they work at restaurant A and they're going to get paid the same day, it's a big advantage. And let's not, I think we should also add, like, that industry is known for some of these the clients you're dealing with are mostly the sort of established large groups, right? But a lot of smaller restaurants, and I know at some point you're going to go after smaller clients, but a lot of smaller restaurants, clubs, they're sort of fly by night, financially. So maybe employees may not want to, wait 2 weeks or a week to get paid. I mean, they want to get paid today, right? So it's a serious issue.
Yeah, and we've been big game hunting for sure. Not that we would ever turn anyone away, but when you think about the time and effort it takes to convert and to acquire a customer, what makes the most sense for us is if there are thousands of employees. So that's what we've been really focusing on. And those types of organizations, having a float or being able to pre-fund the earned wage access is not an issue. So that's been really great. And and now through these partnerships we're working at, we will also be targeting QSR, quick service restaurants, as well. And you're right, there's a lot of folks in that demographic who really need to be able to deal with their lives, their emergencies, their financial obligations on a daily basis, not on a weekly or bi-weekly basis.
Yeah. So, yeah, listen, most people that work in a restaurant, if they're, a lot of it is younger people, right? They don't have a lot of
Yeah,
resources. They might be going to school. They need the money now. They don't want to wait
yeah,
whatever, they have stuff comes up. Okay. So it's a tremendous asset. Again, the total market, restaurant hospitality market it's $1 trillion industry just in the US alone. Up till now, you've been mostly in Canada. Now you're expanding into this $1 trillion US market. But okay, so let's talk about kind of the numbers, because this is the part that everybody wants to know about. Okay, so essentially, where do you see the real money being made? Where do you see the profits being made? Is it when you talk about the GDV, which is the transactions going through your system? So you're at, let's call it $50 million a month going through your system right now. And essentially a percentage of that is sort of, you see that, in other words, you look to capture a percentage of that in terms of offering services. Let's talk about how your business model works, and especially with
yeah.
this partnership.
So you can count on a gross of 1.5% of the GDV moving through our platform. If that money, whatever money is being used at a point of sale, that merchant. So if you go to Walmart or you go to Target and you use any kind of card, not just ours, any kind of card at your point of sale, that merchant is paying a fee to allow a Visa, a MasterCard, an Amex, whatever the card is. They're called the network. There's a network fee. We split that. We get 1.5% of that. And we're not unlike any of the other banks that use this as part of their fundamental revenue source. But there's so many other revenue generating activities and features, benefits that we can add that include microcredit. And that is something on our roadmap for the very near future, microcredit. And what we would do, we want to help these folks avoid predatory payday loans. But sometimes you're in a bind and you need an extra $150 to enable you to go into that overdraft. You would opt in and pay a couple bucks a month for that opt-in, to just give you a little bit of margin. We're adding tip pooling, which now is more of a benefit for the actual business, to be able to calculate the way they disperse and allocate the gratuities within their organization. And the big one, the elephant in the room, is payroll. So, payroll is a very complicated initiative for
There's also liabilities.
Yeah.
Payroll. Yeah, a lot of payments that need to go out. Yeah, so it's
and so we're working with a group that is licensed to do hospitality payroll in 50 states. This gives us a shoe-in right across the country. So as I said, our work is cut out for us: execution, sales, marketing. That's what we're really focused on right now.
Okay. But ultimately, do you see the real, most of the profits coming from, essentially as you evolve as this neo bank, a lot, you're going to have more cash is going to stay in your system. In other words, you have this 50 million a month going through. So on average, and you're really just getting started, because there's been the COVID restrictions for the last 2 years. So, in a normal situation, you might be probably at 300 million a month by now, which if we didn't lose 2 years basically. So let's say even at, let's call it and what do you see as the potential? Do you see how much, let's call it a year from now, let's say when you're operating at a little bit more at scale in the US, what do you see as the monthly GDV going through your system?
So that would be guidance. And I would have to be careful about that. But this is what I will say, Jack. There is no reason why XTM can't be $1 billion company. And our biggest challenge right now is to avoid distractions and noise of all the opportunity that we have around us. We're really focused on some key integrations right now, on rolling out properly, on providing an excellent user experience, and the rest is all going to come into place. So again, there's no reason why XTM can't be $1 billion company. I really believe that.
$1 billion
Value.
valuation. Okay. And actually, I want to address some of the comps, because we talked briefly about some of the comps in your space. But let's say you were doing 50 million a month GDV just in Canada, and this was in a kind of a very quiet market. Let's say we go to 500 million once you're in the US, which is, a massive market. So 500 million a month GDV going through. You're able to capture 1.5% of that as top line, right?
Right.
Okay, so that's 7.5 million a month. So it's about 100 million a year revenues.
Mm-hmm.
Okay. By the way, this is I'm taking response.
Good. My disclaimer. No forward thinking.
Yeah. This is okay. So I'm just extrapolating, and this is what it's based on. It's based on, okay, if you did 50 million, essentially a month, coming out of the pandemic when everything was closed. Now that you're entering the US, then Canada's going to go into full gear. Why not? 10x is not a big deal in terms of because again, it's the US market is 10 times bigger. You have 300 million people here. A huge amount of rest. There's much more stuff, right? So it's so I'm just 10xing that thing. And you're going into a bigger market. You're just going to port that over. So let's call it 500 million a month GDV. So 7.5 million is your goes to your revenues. It's 100 million a year. What are your on that 100 million a year revenues, that what kind of margins do you have on that?
Well, your margin, I would leave that up to our CFO to talk about that, but our margins get better and better. This is a volume play. So the more people we have on our platform, the lower the cost, the cost of goods sold becomes incrementally less. So it is a volume play. That's where you start to see profit. That's where you start to see, positive EBITDA. And that's really where we're focused. Fundamentally, we are a practical business. We're not comfortable living on equity or shareholder money. Our real goal is to be profitable. So, we're very focused on not, on cost and not excessive spending. We're a team of less than 35 people.
Oh, that's a pretty tight operation. Okay, it's a very tight operation.
Yeah, they all work really hard. But everyone in the company has an option to participate in the equity of the company, and you really see it in the way they behave. Like every single person at this company puts it all out every single day. And we are hiring for sure. It's just essential. But for the most part, we could grow 10 times and only have to bring in, I'm just guessing here, but 20
There's
more.
a lot of leverage. This is the beauty of the fintech business. You have massive leverage. You have really, the beauty of the financial industry is like there's big margins. It's not like you're moving, physical goods, and it's just,
That's
electrons moving in a computer, So it's very, very compelling. Now, okay, so so we talked about the GDV, right? So I'm saying you're going to have, let's say 500 million going through the system, but the real upside for you is some part of that money is going to stay in these wallets, because people are not going to withdraw at all, right? Because as they feel more comfortable with your system, they're going to keep a percentage of that in these digital wallets as an alternative to going to their bank. Because I think people these days, they're more comfortable with keeping their balances in these weird, whether it's PayPal, whatever it is, they don't withdraw it all at once. They keep it there because they figure, okay, I'm going to use it. Because at this point, I don't need a bank. If I'm using your system, I have a debit card, I have everything else. Why do I need Chase? Which charges me all these fees when I have this thing. It's very easy. So how much in assets do you think you're going to have at 500 million, GDV per month?
I knew you were going here. The reality is we are, that is money in trust. That is money in trust that we have to keep available. In fact, there's a reconciliation that goes on at the end of every single day to ensure that every dollar that is, sitting in people's wallet is there and available and liquid. So there's not much we can do with that money. That money sits there, and because we're.
I think what I was saying is, okay, so they're going to be, those assets. I mean, there's other services you could offer. So in other words, essentially, I'm using that kind of as maybe as a metric for other services, because I don't know if let's say you have $1 billion sitting there at any given time, there's probably, I don't know, a couple of 1% a month or more generated in different services. No?
Yeah, you're right. There's all kinds of, once you have that kind of liquidity and that kind of volume, there's all kinds of things that you can do. And just if you do the math and you think about the fact that, we've got a pretty aggressive target in terms of number of members or cardholders that we have on by the end of this year. And I won't throw that number out there, but I will use an analogy that if you had, for example, 500,000 users, and you add a feature that costs $2 a month, that is of great value to those users, there goes your revenue, and you've 75% opt-in. You're looking at another, 750. You get what we're talking about in terms of the volume, the multiple. And we've seen this ourselves with companies. We've watched companies in our space, and we've seen them spike. You can spike dramatically, even in the space of a quarter. And so we've done all the hard work, and there's more to do for sure, but we really do believe that we're going to start seeing the fruits of our labor.
Okay, I want to jump to some audience questions. We have some good questions I want to get to. I want to ask you one last question here, which is, okay, so let's talk about some of the comps. Before we started the call, I think we were talking about, okay, so you're going to have 100,000 clients on this, in the U.S. platform right now. So with the debit card and everything else in the U.S. market, and I was asking, how do we value this? And you mentioned a comp. So can you share that with our audience?
For sure. So there's some very frothy valuations going on, especially with the private companies in our space. So for example, we will be approaching 100,000, 200,000 users, and you can easily see what our valuation is. Others with maybe 400,000 users are looking at $1 billion valuation. So certainly there's some disparity right now between where we're at. We've been asked, why did we go public as soon as we did, and et cetera. The reality in Canada is we had an opportunity that we wanted to seize, and we wanted to move quickly, and it can take a lot of time to raise money if you don't have an imminent liquidity event. So we went public as a very small company, and we worked ourselves through the ranks, and we feel like we are now coming of age.
It's kind of, I mean, for you to go public early, because again, in the US, you'd still be a private company with maybe a 500 million valuation. Right. So it might be bad for XTM, but it's good for investors at this point.
It is good for investors.
It's investors are basically stealing the company here at this valuation. How many shares outstanding do you have right now, like fully diluted? Would you?
160 million, 160, somewhere around that point.
Okay, so the market cap is, what is it, 50 million, whatever US, 50 million US, and really it should be, based on the comp you just mentioned, 250, it should be 5x that. So, because if this other company, can you mention the company? You said that they have 400,000 users, they're at $1 billion private valuation.
Yeah.
Can you share their name?
I won't. I won't share their name. And there's lots of examples like that.
Okay.
It wouldn't.
I mean, there's a million of these guys, but it's like I'm sure people can figure out who it is.
Yeah.
It's not like unusual in the fintech space. But
right.
Okay, so if they're at a $1 billion valuation with 400,000 users, and you have 100,000 users, I mean, if I do the math, that puts you at a 250 million valuation as a private company, essentially.
Right.
And so there's really a 5x upside from here. This is what I see as this kind of, there's a built-in catalyst right now for investors in XTM. Like looking at the stock, this is like one of the catalysts. You have this you have this upside in valuation, just as kind of the market gets to know the company better. There's more awareness. People are going to start valuing XTM as typical fintech stock, and there's so many of them that are trading at crazy multiples, whether it's, I don't know, SoFi or we can go through the whole list. It's a crazy market.
And I think it'll just take the investors. They need to feel confident with our trajectory, and I think that we're coming around to that. Certainly, the finance community is, and we're relaxed. We're in a good spot. We've got cash in our account. We've got lots of opportunity around us, so we're feeling pretty confident.
Okay, and you guys raised money just a couple months back. So you have how much cash, a ballpark, you have?
We've got about $8+ million sitting on hand. Yeah.
Okay, so you're in a good position. There's no need for any additional raise. Okay, so in terms of I just touched on some of the other players in the fintech space with massive valuations, which kind of leads me to think at some point XTM. I mean, it could be it could be a very compelling target for one of these guys. Why wouldn't they pay $300 million for the company, whatever the number is? Or maybe you could do your own M&A, buy other companies as your market cap increases in the space.
And we're not sitting here on our hands. We are moving aggressively forward. We want to do right by our shareholders and by the group that have got us to where we are today. But I will say this, that we are very ambitious about what we own in the ecosystem of the hospitality space. And we feel it's very important for us to be able to provide a holistic solution so that the restaurants and the businesses out there in the hospitality space can focus on what they do best, which is delighting a customer, with a fantastic meal and a fantastic experience, while we take care of the back office for them. The accounting, the bookkeeping, the payroll, the gratuity payout, attracting and retaining employees, all of that stuff, that is not part of their core competency. That's the part we want to take care of.
Yeah, no, it's a very valuable service. Okay, let's get to some audience questions. Andre Philippe, I think he was on the last live stream, asking a lot of questions, so he's a good Q&A here. Hi, Marilyn. Congratulations on the latest news. Is there a way for you to give us more information on who this new client is? What umbrella are these 100,000 users under? I guess he's asking, who is this partner?
Yeah, who's the partner? And so, Andre Philippe, we will reserve that information. It's actually in all our best interest to reserve that information for a couple of weeks, just for competitive reasons. But we will absolutely disclose the name of that partner in due course, very shortly.
Okay. Now you have a debit card as part of the platform. I guess Jonathan's asking, what are the fees, interest rates? Is it like in line with the market, or what?
No, because it's a prepaid card. It's a debit card, so it's your money that sits on the card. So there's no fees or interest rate associated.
Okay. What else? What other kind of news flow can we expect, let's say, from XTM in the next 30 days or so?
New clients. New partners, maybe a little bit more specific about new partners. And part of our challenge is that because we are viewed as a competitive edge for many large restaurant groups, is sometimes they don't want to announce it. So we're working on that to enable that kind of disclosure.
Okay, so bottom line is a new, sort of a new service added to the platform, so there's some great catalysts for an increase in value here, based on the comps we talked about.
Yes.
Fantastic. Okay, Marilyn, I want to thank you, and we look forward to more great news, more developments from XTM in the coming weeks.
Awesome. Thanks, Jack.
Thank you.